welcome you to this week's Real Estate Rundown. Today we have Allie Maldonado with the Mortgage Link here joining us, and welcome.
Hi, thanks for having me. I'm happy to be here.
Yeah. So a lot of questions some folks have about buying houses, mortgages, things like that. There's a lot of unanswered things out there.
For sure.
So
Yeah.
we want to bring some information to the viewers who watch this week in and week out. And one of the things that might be helpful for folks to know is what are some of the different programs out there?
Yeah, so there's like several options. So it really comes down to like coming up with like a tailored plan as to what program really fits you and what you're trying to achieve. Because at least in my opinion, I think it's the loan officer's job to understand what you're trying to do and how you're trying to get there. Obviously, it's to purchase a home, but people have an idea as to how they want to get there. So in terms of programs, there's conventional, FHA, VA, USDA, and then of course there's like piggybacks to those to help those programs become more affordable, like down payment assistance programs. There are several programs out there for down payment assistance. One of the major ones that we use day in and day out, after 3 years, becomes a grant, so you don't even have to pay it back.
So you mean with down payment assistance, we don't even have to have money to buy a house?
Kinda, sort of. I mean, I've had a borrower come in with the realtor negotiating stuff, $200 check, you know. It just depends on what the risk file is and how it all pans out. Again, a tailored plan.
Sure.
Yeah.
Well, I know some kind of things here is banks will approve you for $300,000.
Yeah.
Does that mean you need to go spend $300,000?
Absolutely not.
You
Yeah,
talk about
no.
a tailored program.
Yeah,
Something
for
to think
sure.
about.
So just because the bank says, yeah, you can go do 300,000, well, you have to also take into consideration there's things that we don't know about. Like for myself would be daycare. I know that I have an $800 bill every single month, but that's not reported on my credit bill, but I have to take that into consideration. You know, there's things like that that you need to account for that I won't know of. So
Sure.
come in knowing, okay, from here to here is where I feel comfortable in terms of a payment, and then it's my job to help you get there or educate you as to why it's more or why it's less.
Sure. That makes a lot of sense.
Yeah.
You know, coming in with an idea of a payment rather than what do I qualify for?
Right,
Makes
right.
the shopping experience a lot less stressful and
Absolutely.
surely home ownership.
I don't know about you, but I don't like to go shopping if I don't know what I can afford. So
Exactly.
Yeah.
Exactly. When we talk about getting pre-approved, what does that mean? And when should somebody get pre-approved?
So what it means basically is like having a conversation with the loan officer and saying, okay, this is what I'm trying to do. This is my time frame to when I want to do it, and kind of come up with that tailored plan, whether it's 3 months, 6 months out. There's never a bad time to have that conversation if you're considering it. So then it's the loan officer's job, my job, to say, okay, so based off of X, Y, and Z, this is what you're kind of looking into. In terms of getting pre-approved, I would say do it as soon as the thought kind of comes across, because
Sure.
houses come on the market every single day and you never know when it's going to spark your interest. And if you haven't already done that process, you could be behind everyone else who already has. And
Sure.
there's things that pop up on your credit that you may not know are there, and you may need 2-3 months
Sure.
to recoup that credit or rebuild it or whatever that may be.
Sure. What is a typical, going back to the idea of, you know, when you should, what is a typical loan or a commitment to loan or an approval letter, however the terminology may be used within the mortgage side of things? How long does that letter last?
Well, different loan officers do it a different way. Different places do it a different way. But for me, they can last up to 120 days because that's how long credit reports are lasting these days. But I don't like to set up my borrowers for failure, right? So if our debt to income ratio is really, really tight, I may say, okay, let's revisit this in 30 days. Let's
Sure.
revisit this in 60 days if you're kind of moderate. If it's just like you're purchasing way below where the bank even says that you should be, then it should last 120 days. But
Gotcha.
again, it's just me doing my due diligence of protecting you and not setting you up for failure.
Sure. Makes
Yeah.
complete sense. One of the big things, you know, I hear as an agent is, man, my credit's terrible. I don't know if I can qualify. Is there hope for those folks?
Absolutely. And in most cases, people think that their credit is way worse than it really is, because they have to remember that mortgage uses a different FICO than something that you could pull on Credit Karma. It could be 20, 40 points in either direction. Again, that's why, hey, talk with the loan officer if you're even considering it, because I can look at it, give you a full workup and an analysis. as to what this could potentially turn out to be.
Sure.
So,
I know that there's, success stories of every kind.
Yeah.
And I'm sure you have some great ones that
I
you could
do.
share, but give us an idea of what some possibilities can look like,
Yeah.
that you've experienced personally.
Yeah, so there's two really that speak out to me, and like I will remember. There was one lady right before I had my baby last year. She had called me, I don't know, month and a half before I had my daughter, and she was like, "Hey, I'm moving to Canyon, and I really want to buy a house." Pull her credit. There are no scores. There's absolutely nothing there, and so I gave her a plan. At no cost. I was like, "Hey, this is what you need to do," and she followed it, and she trusted me. And no joke, while I was giving birth to my daughter, she was at the title company signing 30 days later.
Wow.
Yeah, she went from no credit to an 800 credit just because she trusted the process. She listened.
Sure.
So it's kind of one of those like, what you put into it is what you're going to get out.
Sure.
And I just had one recently that went from 0 to 800. So I mean, it's just a matter of like, how bad do you want it kind of
Right.
thing, because it's absolutely possible. You just got
Right.
to find the right team, and it makes all the difference.
Sure.
Yeah.
I know some of the guidelines talking specifically about credit score, the guideline says, well, you have to have this or you have to have that.
Yeah.
For those folks who maybe are lacking a little bit,
Yeah.
do you offer anything for them to help educate them to get to that qualifying score?
Yeah, so typically, in standard speaking, a qualifying score is a 580. But I just recently had a borrower who was below that threshold, and she listened to me, and they were able to go out and do what they needed to do, and they were able to get a home just because they listened. They were able to do the timeline that I had suggested. Again, the timeline makes all the difference. Like, they were like, "Hey, this spring, summer, we really want to move, but we know our credit isn't super great. Can you help us?" Absolutely. This is what we need to do. They're like, "Oh, a 580 credit score." I'm like, "It's okay. I can still help you. Let me look at everything and come up with that tailored plan." So just
Sure.
because it's below that doesn't mean that it's completely over. There are ways.
So moral of the story, don't run out and just go buy credit repair services. Let's talk to a lender first who
Right,
can
right.
get you tailored.
Absolutely.
something
Yeah, because
more
there's some
direct.
things that I can do in-house, whereas the money that's needed goes to repair the credit, not to me, or not to my company, to your credit,
Sure.
to repair that. And it's two birds, one stone, right? Get the house, pay down some debt, feel a little better about that payment. It's good stuff.
Life's good.
Yeah.
Yeah. Some of the most important things people should know about mortgages. It's a huge step. It's a nervous step for some. Some people have done this 4, 5, 6 times. This is like going down to the store and ordering a burger.
Yeah.
It's not a big deal. But for those people who've never done this before, what do they need to be aware of?
Well, what you really need to be aware of, at least in my opinion, is the people that you're working with, right? Sit down, talk to them, see if they kind of go with your ethics and how you feel and how you want this transition. Make sure that they see you and understand you, not just say, "This is what we're going to do."
Sure.
No, like say, "Hey, this is what I want to do." So be open and honest. Don't try and because at least on my side, if you hide something, I'm probably going to find it. So just tell me. Just tell me straight up, and I can help you circumnavigate that. I can
Sure.
help you figure that out. So be upfront and honest with what you're trying to achieve. And just know, regardless of what lender, me or someone else or a large bank or whoever, a lot of those guidelines, a lot of the stipulations that we're telling you about are set by the federal government, right? Or there's certain guidelines that we have to do, and we have to do our due diligence to get you there. And with that being said, there's also documentation. Okay, so for in most cases, have your pay stubs ready, have your W-2s ready. Some cases, tax returns for the last 2 years. And if you have any form of other income, alimony, child support, disability, have those awards letters ready too, because that will help move along the process.
Sure.
Yeah.
So it's not all bad,
Not all bad.
but definitely you could say I guess they need everything but a blood sample.
Oh my gosh.
you
Yeah.
know, but it's all really to protect them in the end.
Absolutely.
It's
Yeah.
From what I understand, at least in my experiences, you can go to a lender, you can get an approval letter, and you can go buy a house.
Yeah.
But the reality is maybe not everything's checked. And
Right.
so, I know in working with you in the past, you know, it's always verified information, you know, so it's all about
Trust but verify.
Yeah, exactly. Have everything ready to go.
Absolutely.
So when you go get under contract, you're not losing money.
Yeah, and when it comes to like my pre-approvals, I find value in them, and I want other agents in town to know that there is value behind that piece of paper. Not that I didn't do my due diligence and talk with you and figure it out, and then you just 3/4 way through find out that you're actually not qualified. So again, it's having that consultation and talking through everything and being transparent and honest, because I don't do surprises.
Yeah.
Not on my birthday, not on Christmas. My husband hates that, but especially not in business.
Yeah.
Especially not in business.
Don't want to.
Yeah.
Definitely don't want to get somebody in a money
That
losing
means
situation.
don't change your credit either. That's what that means.
You mean I can't go buy a truck
No.
while I'm buying a house?
No, don't finance anything. Keep credit exactly the way that it was when we first started talking, unless instructed otherwise.
Sure. So that's a big one right there. Is,
Yeah.
You know, you hear it time and time again. Don't go buy that house full of furniture. Don't go buy that truck. Don't do any of it.
Yeah.
But if you have to, like you're in a pickle, talk to the lender first.
Absolutely.
Say, hey, I really need to do this. Not just because the car needs new wheels. We need to make sure that, hey, this is legitimate. We need to make sure this isn't going to affect your qualification process.
Yeah, absolutely. It's one of those things. It's just a quick text message or a phone call. Hey, can I do this? And based off the information that I know, because I took the time to learn you and learn about you and what you're trying to do, it could be, oh yeah, go get the new wheels, go get the new tires, or get the refrigerator. That's fine. It's not going to hurt you. But in an all-around case, just keep the credit. Exactly the same.
No touchy.
No touchy-touchy.
Well, Allie, I wanted to thank you for coming by. I mean, it's a moment that we take every week to try to educate our viewers. It's not here to try to push one way or the other.
Yeah.
We just want to make sure that someone who may be on the fence about buying, they have a little bit of peace of mind, a little bit of education that otherwise wouldn't be out there.
Yeah, absolutely.
So we appreciate you coming by and sharing with us. We know it takes time out of your day to
Thanks
make
for
this
having
happen,
me.
so.
It was a joy. Yeah.
And to you guys, our watchers, you know, thank you for watching every week. You know, take a moment, follow all of our socials. They'll be on one of the slides next here for you to take a look at and explore and do your own learning. You know, it's not all about what we say. It's
Absolutely.
about what you learn. So thank you again.